Meta Platforms announced earnings after the market closed on Wednesday, and the market's reaction was really negative. The stock was down over 12% early in trading on Thursday. As I'm recording late in the day, shares are down about 10.2% right now. And a lot of this doesn't really make sense if you're following the company closely. It seems like results were really good. Meta is investing a lot of money in artificial intelligence, where it seems to be leading, open sourcing new models, introducing all kinds of interesting new products like Meta AI, which I covered earlier on this channel. So why is the market's reaction so negative? I want to dig through some of the numbers today, some of the trends that we learned, and then there's one chart that I think really shows exactly why the market is a little bit concerned with some of the discussion about spending on artificial intelligence and just the sheer scale of money that's going to be invested. So I don't necessarily agree with the market's reaction, but I understand it based on these numbers. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's first look at the stock chart from today. You can see here that the market's reaction was really negative. Shares were down in the $415, $416 range at their low. Have obviously crawled back a little bit later in the day, but let's look at what results looked like and why investors weren't all that happy. First, a bit of seasonality in the business, so that's not all that surprising. You can see $35.6 billion in revenue. If you look at the segment results, a vast majority of Meta's business comes from advertising, and in particular comes from the family of apps. So that's going to be the major driver of the company's financials. Maybe not quite the same growth that we had a couple of years ago, but still a nearly 27% growth rate in advertising spend. So I think that's just phenomenal numbers for a company of this size, just scaling the business tremendously well. And you can see that operating income improved as well, $11.2 billion, and now up to $17.7 billion for the quarter. You can see that Reality Labs continues to be weak, continues to be a very poor business on its own. I don't think this is going to change anytime soon. This is one of those things where if you're investing in Meta Platforms, you're investing in Mark Zuckerberg's vision of the future of technology. I think this is generally a waste of cash. It would be more beneficial for Meta to be investing in some sort of other company that's doing virtual reality, but that's a story for another day. Right now, we're having losses of $3 to $4 billion per quarter. So a massive amount of money being spent. The good news is, and they talked a lot about this on the conference call, some of the money that has been spent building both infrastructure and hardware for the metaverse is now being moved to artificial intelligence. So this includes GPU compute that was maybe built to build metaverse tools, now moving over to creating chatbots that you can actually talk to within some of their apps. So not all of this is totally a waste, and it sounds like they're probably going to change their reporting at least a little bit in the future as AI becomes a bigger thing for Meta. But just something to keep in mind, that Reality Labs continues to be a very poor business. We don't know if this is ever going to turn around, but also not all of this money is being spent on VR hardware and software. Some of this is actually going into AI. It's just a matter of where they're just making that distinction between where the costs go. The other thing that Meta has done a phenomenal job of is reducing their costs. They called 2023 the year of efficiency, and you can see that costs are down across the board. So just phenomenal cost control. And this is one of the things where Mark Zuckerberg can make these changes extremely quickly, unlike most other CEOs and founders. Net income was $12.4 billion for the quarter. You can see that that was a sharp increase from a year ago. Again, no surprise given the revenue growth and the cost containments there, but obviously not something that the market was all that focused on in their reaction. So what was the market focused on? This is the number right here. $28.1 billion in capital expenditures in 2023. In 2024, management said that they're going to be spending $35 to $40 billion on capex. That is in large part to build out the infrastructure for all these artificial intelligence tools, the things that they're building in the background that we don't necessarily know about until they come out. That would be like the Llama 2 and Llama 3 model. Those are now open source, but they're also including tools in some of their apps, Meta AI. They're also building tools that will eventually be purchased by businesses. We're very much in an investment phase in artificial intelligence for Meta and kind of experimenting with what's going to work and what isn't before you get to the monetization phase. So this is an investment, before you're actually starting to make money. And this is where the market starts to get worried. And let me show you exactly why. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. This chart shows Meta's free cash flow on a trailing 12-month basis. So basically looking back each quarter to the last 12 months. And you can see this massive dip in late 2022 and early 2023. There's a couple of impacts from that. One was there's the impact of ATT, Apple's app tracking transparency. So that reduced revenue and the effectiveness of some of the ads on the Meta platform. Also, some costs got out of control as the business spent more during the pandemic. But the other thing was a massive increase in capital expenditures. You can see that in 2022, $31.4 billion in capex. That peaked in that first quarter of 2023. That was when they started to talk about efficiency at $32.8 billion. So when you see the increase in cash flow and net income for Meta over the past year, part of it is driven by the fact that they haven't been spending as much money on capital expenditures. Zuckerberg and team basically said that's going to reverse, and we're going to go into an investment phase where we're going to be spending 35 to 40 billion this year and probably even more next year, building out the infrastructure and tools that we need in artificial intelligence. A big part of that capex in 2022 and 2023 was actually in response to TikTok and building out the infrastructure needed for Reels and some better recommendation algorithms. So a lot of things that we don't necessarily see as Meta users, but makes the business more effective long term. So again, upfront investment, payoff comes over the next 1, 2, 3, 4, 5 years. The thing that I think the market is worried about is this is potentially a very long-term investment cycle with an unknown payoff. We don't know exactly what the use cases, what the monetization, what the ROI profile is going to be for artificial intelligence. So if they're going to invest, let's say, $100 billion over the next 2 years in artificial intelligence capabilities, what's the payoff for that? Does that mean advertising revenue is going to go up a commensurate amount over the next few years? Does that mean there's going to be new businesses created? And we simply don't have the answer to that. And that's ultimately what investors are worried about. Investors like certainty. Investors like to know, okay, this is what we're investing. This is what the ROI is. This is the core business. This is how much it's growing. This is the operating expense profile. When you know exactly what to expect from a business, it's very easy to model it and project what it's going to look like in the future. But with Meta's business and what Mark Zuckerberg has proven over time is that it evolves and changes every few years. When they bought Instagram, when they bought WhatsApp, when they introduced stories and reels, these were big fundamental changes to the business. The news feed even was a huge change to the business. But they have proven time and time again to be prudent capital allocators long term, even if they're willing to give up the short term. And I think this is fundamentally what makes Zuckerberg a different CEO than most CEOs. He fully controls this company. Outside shareholders basically don't have any voting rights because he has super voting rights. So he can do whatever he wants. If he wants to invest in the metaverse, he can do that. If he wants to invest in artificial intelligence, he can do that. And right now, that is the next investment. And it's clear what they're investing. It's not quite clear what the payoff is going to be. But I think in the case of Meta platforms and all of their products and the way their business model works with advertising, there is at least a clear line to where they're going to generate a lot of revenue and add a lot of value to users and to businesses on their platform. That's what I'm ultimately excited about as far as this investment goes. They are going to use what's called a scorched earth strategy in artificial intelligence. They're going to build these models, put billions of dollars into these models and give them away, open source them. That's going to destroy the value that OpenAI is trying to create, that Mistral is trying to create. And they can do that because they know that the open source community is going to help improve those models, is going to make their models a standard, and is going to make sure that the model itself, the AI model, is not the point of value in the value chain. The point of value for Meta platforms and all of its products are going to be the actual use cases for artificial intelligence. And that's where I think the company has a lot of potential. So understandable that the market's reaction was a little bit negative given the fact that there's a lot of investment that's going to be happening over the next few years. But I think it's the right move, and it actually makes me more bullish on Meta platforms. If shares fall significantly over the next few months or the next year, maybe a stock I finally jump into. I have never actually owned this one. But this actually makes me more intrigued because I think this company is positioned better than most in artificial intelligence. But what do you think of the result? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you next time.